Good morning from the Asia Pacific. Half an hour to the open of Hong Kong. Mainland markets are still shut for one more day. You're watching the China Show. I'm David Ingles with Rebecca Choong. Wilkins.
Our top stories today. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agreed to tougher measures against migration and drug trafficking at their borders.
Attention now turns to China, with a threatened 10% tariff due to come into force today. Trump says he may speak with Chinese officials over the next 24 hours.
Plus, how a potential shutdown of the top USAID agency could create an opening for rivals like China to boost their influence in the developing world.
Right, so markets are, I guess, in many ways dealing with this temporary truce, this opening in the clouds as it pertains to tariffs on Mexico and Canada. It's still a different conversation as it pertains to China, and, we still have about 4 hours left before the 10% tariffs kick in. Who knows, of course, what the next 4 hours might hold. But that being said, though, markets are trading on a relief rally we're seeing across just about all assets right now. Asia Pacific, we're up about 0.8 of 1%. S&P futures are back above, as you can see, that 6,000 handle. Following, of course, that reversal, which actually took place mid-session in the U.S. to close effectively almost flat. That's effectively what we got, in fact, in Hong Kong yesterday as well. A50 futures are pointing to 0.6 of 1% to the upside today. Right. The FX markets are also a very good benchmark for risk appetite right now. So at these absolute levels, we are seeing at about midpoint, if not in some other cases, like the Canadian dollar, for example, has retraced almost all the way back to about 72 hours back. That being said, the dollar, as you can see, is again slightly to the upside here, early hours of Tuesday in the Asia Pacific. A lot of notes are coming out here as far as the Chinese exposure is concerned, right? So Maybank, one of them, expects the renminbi to remain weak. Capital Economics think eventually that trade talks will break down between China and the U.S. That actually takes, they think, the exchange rate to 8 against the U.S. dollar. More on that in a moment here. Oil, golds, and some of your major cryptocurrencies that were coming off, of course, that massive crash in Ether yesterday, down as much as 27% at one point. We're steady, and we reversed most, if not all, in fact, the losses from this time yesterday. But, yep, as you can see, we're still on tenterhooks, really.
Yeah, I mean, the day really dominated by this sort of risk reversal story. Yeah. We weren't sure whether or not that was indeed going to happen. It looked quite unlikely yesterday. But, of course, now just this big question mark over China. We have that tariff deadline nearing about 1 minute past 1 p.m. Hong Kong time or so. Mainland markets are still shut, but we did have a bit of activity in several sort of Hong Kong Chinese names. One to watch, Greentown. We had a profit warning out from them. Now, the last profit warning that came out was back in 2019. This is a name that has been seen as relatively stable, relatively resilient. But I note, last year, we had analysts warning that the story about Vanke could spread to Greentown. Essentially, this issue, developers been holding back their write-downs. Do we now see that spreading to some of these bigger, more resilient names, such as Greentown? That's one certainly could have keep watching out for that. Elsewhere, Evergrande, new energy vehicles, sort of still struggling, saying it's unsuccessful in securing strategic investors to help alleviate some of those liquidity problems. HKBN, another deal, but this one is perhaps more successful. Says discussions, negotiations with I Squared on this possible offer. They're still ongoing. No deal reached yet, but we're continuing to eye that. And then, to Dave's point about this risk rally coming back, of course, we said that sell-off in riskier assets yesterday. Keeping an eye on crypto stocks to see what happens through today, Dave.
Yeah, it seems like a different world 24 hours from yesterday, Rebecca. We're having a conversation here. It almost seemed like we were really on the at the edge of the cliff here. In fact, one market coming online right now, also a good proxy for risk appetite, is the TAIEX index, Taiwan. So we're up 1% as far as that market is concerned. All right, let's get the latest here on all the tariff conversations, multiple angles to the story. We had to cover the story covered for you all across the world. In Washington for us, our global economy correspondent, Enda Kern. In Mexico City, we're joined by our bureau chief there, Carolina Milan. And here in Hong Kong, our chief North Asia correspondent, Stephen Engel, joins us right now as well. Enda, we start with you. What triggered this change of heart out of Donald Trump?
So two different agreements today, David. One with Mexico, with President Claudia Sheinbaum effectively coming to the table to say they're going to put an extra 10,000 troops on the border between the US and Mexico to curb the flow of fentanyl. That was a big takeaway from the agreement with Mexico. And then with Canada, Prime Minister Justin Trudeau making the point that they're going to declare cartels as terrorists. They're going to appoint a fentanyl czar. They're going to put about $1 million on the table for upping the security forces along the border there, plus 10,000 troops. And all of that together was enough for President Trump to step back and say, put a hold on the tariffs for now. But he did say that, in a month from now, those tariffs may yet go into place if they haven't yet worked out a full agreement. So certainly a big change, of course, today. A lot of relief around Washington, D.C., but the tariff threat hasn't gone away completely.
And, so as you say, temporary reprieve offered here. What happens next?
Well, clearly there's going to be focus and scrutiny in terms of how Mexico and Canada implement this agreement such as it is. Now, there's plenty of skepticism already in terms of what Canada and Mexico have put on the table. There have been observations that some of this has already been announced and done in the past. It's kind of a recycle of that. Nonetheless, there will be close monitoring of that and monitoring commentary as we run up to that deadline in a 30 days time from now. But remember, that's the Mexico-Canada part of it. Those tariffs, the 10% tariffs on the Chinese goods are, as of now, planned to go ahead. There is a call with President Xi supposed to be coming up. And, of course, President Trump has warned he may yet push ahead with tariffs on the European Union and other trading partners. So, yes, we've got a bit of a holding pattern on Mexico-Canada for the next 30-odd days. But going forward, I think the direction of travel in terms of trade policy remains very hawkish.
That's Bloomberg's global economy correspondent, Enda Curran in Washington there for us. And turning to our Mexico City bureau chief, Carolina Milan. Carolina, tell us, what do we know so far about the Sheinbaum-Trump agreement?
Well, I will add to everything that Enda was just saying that it sounds like it was a very productive conversation. Both the leaders outlined that. And so it sounds like the key takeaways are on three different areas: security, migration, and trade. On security, like Enda was mentioning, having troops in the northern border, the border between Mexico and the US, will be key for to create more impact in terms of the fentanyl trafficking and also in monitoring migration. And that would mean that the next working group to keep an eye on is the one on trade, where we're still waiting for several U.S. officials to be ratified, which means that discussions can't start right away. But what we're seeing here is that both leaders were able to find the more productive approach to work together on these issues and to kick the can down the road when it comes to the tariffs themselves.
Yeah, Carolina, it's a very good point. It really throws the story forwards. What comes next? Can I trust this truce?
I think what's going to be key for investors to watch is to see what concrete actions happen on these agreements. So certainly we'll all be looking to see when these 10,000 National Guard members are deployed and what impact that actually has in the data. Certainly we'll also be watching the other working groups, whether they lead to concrete agreements on how to proceed on migration, for example, on trade, and on these joint security measures. One win for Mexico certainly was the fact that arms that come from the U.S. into Canada were part of this discussion. This is something that has been a gripe for the country for many years. So if the cooperation is real, there might be a real shot at properly closing the discussion on the tariffs. Time will tell.
Carolina, I suppose this whole episode has also underscored some of the challenges for Mexico when it comes to relying on, a country like the US that has been such an important partner and ally. What has this episode and what does it show about the challenges that are now facing Mexico from an investment point of view?
I think this is a really interesting question because it really has to do with the fact that supply chains shifted in the past couple of years due to the pandemic, due to the many shifts we saw around the world. And so there was this clear narrative that Mexico had a very unique opportunity to take advantage. It's often called nearshoring, right? This idea that companies would move to Mexico to take advantage of the proximity to the US. But I think for many companies and for many investors, that had an underlying assumption. And that assumption was that the three countries would continue to work together under this trade agreement, that these countries wanted to maintain this trade relationship that's very unique. And the reality is that this rhetoric has put all that into question, right? So we have a little more certainty now, but there has been a lot of talk about the USMCA review, the review of the United States-Canada-Mexico agreement in 2026. Some political analysts even say maybe we're moving towards a world where rather than have the agreement be valid for several years, there's going to be revisions every year. And that, frankly, creates noise for investors or for companies that are looking to invest in the long term. So the key here will be, are there more signals that this multilateral approach to trade will continue? Or are we at a moment where things are really changing tack and countries are looking to go their own way?
Carolina, fantastic. Thank you so much, Carolina Milan there in Mexico City, our Mexico City bureau chief. So Canada, check. Mexico, check. At least for now, things do look better. It's a lot still quite uncertain as it pertains to the China side of the conversation. Here, President Trump says, well, his team may soon speak with China seeking a deal to avoid that threatened 10% tariffs. We're just about 4 hours away from that deadline. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through this. Any signs, Steve, that these talks are taking place, or any signs that they may actually strike a deal?
Well, the only indication is that Trump says likely to speak with China. I would assume that would be Trump and Xi Jinping speaking in the next 24 hours, and that was a couple of hours ago. White House officials are saying it could happen over the next couple of days. But as you rightfully said, this deadline of 12:01 Eastern time in the United States, which is 1:01 Beijing time or Hong Kong time, so less than 4 hours from now, is coming fast. And is there time to set up a call? I don't know where Xi Jinping is on the last day of the holiday, but I would assume he would be available for a phone call if he wants to avert this. The indications are that this will come into effect, and then they'll have to negotiate or talk on the phone after it comes into effect, unless they can get a phone call going over the next couple of hours. Obviously, they last talked on January 17th. They talked about trade, they talked about fentanyl, and they talked about TikTok, according to Donald Trump, among other things. This is a different situation. A lot of people said, oh, wow, Mexico and Canada have negotiated a 30-day truce, so China could as well, right? Well, yes, they could, but it's a different issue. They have the border issues between Mexico and the United States and Canada and the United States, and there's immigration issues. This 10% tariff on China is related to the production, America's allegations of the production of the precursors of fentanyl. And it's not something that China has necessarily said, yes, that's happening. They've said they'll work with the United States to help combat it, but what can Xi Jinping say in that phone call to basically get the same kind of delay? That's my big question.
I mean, I sort of want to put that question to you, Steve, although I know it's a bit speculative. And I'm asking because it does seem now that President Donald Trump was offering a sort of off-ramp when it came to highlighting, connecting the tariff to the immigration, when it came to Mexico and Canada. Similarly, he seems to be offering this off-ramp to China. Just give us a little bit more context about China and the fentanyl issue. Why is it so hard for Beijing to move on this?
Because it's not officially happening, right? It's not in the public discourse. And keep in mind, when Xi Jinping has to have some political advantages to having the retaliation, the reciprocal moves on the Trump threats of tariffs. And that's something that could come in trade policy, obviously, with tit-for-tat tariffs of their own, as they did in 2018 and 2019. Once those tariffs became enshrined into U.S. law, then China started rolling out the reciprocal tariffs and other actions on curbing key minerals like germanium and gallium and others. This time, what can they pledge to the public of China and to the public of the United States on fentanyl? It's a question I'm asking all the time as well. I think there are words to be said that could perhaps allow Donald Trump to give that reprieve. But again, what is it? That's what we don't know. China, again, is on holiday right now. So I think they're waiting for this to actually happen, and then they will start putting into place some of the steps. But they're going to have to make some serious acknowledgments in that phone call with Donald Trump to get the reprieve on the 10% tariffs because it's tied to fentanyl.
Right, and we're 4 hours and counting down to whenever that deadline comes into place, and then possibly this call. That's Bloomberg's chief North Asia correspondent there for us, Stephen Engel. And we have plenty more ahead on the impact of the tariff turmoil. The Amundi Investment Institute joins us to talk market strategy next. And we're counting down to the open of trade in Hong Kong, the second day back after the Lunar New Year for Hong Kong markets. This is the China Show.
What is his plan? I think it's very confusing for our trade partners not to know what it is that he wants.
And that was the former U.S. Trade Representative Carla Hilt speaking after President Trump reversed course and hitting Mexico and also Canada with trade tariffs. Could this happen with China? Well, we have less than 4 hours away from the initial deadline kicking in. Aidan is with us here on set, Senior Asia Investment Strategist at Amundi Investment Institute. Good morning and nice to see you.
Good morning, David.
So, should I get Happy New Year?
Yes.
Can it be a happier year the next four hours or so? Can I get my hopes up over a potentially last-minute deal here with China?
Very difficult to say. Obviously, Trump is unpredictable. We always say that, the only thing certain about Trump is uncertainty. I think, these two decisions about suspending tariffs on Mexico and Canada came after phone calls between President Trump and his counterparts in those two countries. We don't know if there is a scheduled phone call between President Xi and President Trump. Maybe there is one that we just don't know about it. So let's wait until the 11th hour. There could be a surprise. I think with more seriousness, the purpose behind those tariffs threats are control of illegal drugs and undocumented migrants. And both countries, Mexico and Canada, offer some concession to President Trump to win this 30 days truce. And I think this could be an area that is easier for Beijing to make concessions as well, right? To agree to increasing cooperation with the U.S. to control the flow of fentanyl. That's certainly an area that Beijing can agree with the U.S. Much more easily compared to making concessions on economic, trade, or geopolitical issues. So maybe that's a reason for some optimism that we could see a turnaround, or even if the tariffs are put in place, they could be short-lived.
I mean, this whole episode underscores this real issue over reversal risk reversal,
Sure.
right? And we're still in the midst of that now with this potential China deal, no deal.
Yes.
How do markets actually play this?
I think we have seen a lot of flip-flopping in the tariff narrative, right? Just look at the last couple of months. When Trump won the election, people thought that the tariffs are foregone conclusion, 60% on China, 10% on everybody else. These are coming in fast and furious. Then for a period of time after that, if you remember, China was actually out of the tariff spotlight. All we heard was a good phone call between President Xi and President Trump, and there was a good vibes between the two governments. So people thought that, maybe tariffs are off the table. Even if they are still on the table, the implementation could be significantly delayed. Then we wake up to the reality 2 days ago that tariffs are coming. Not only they are coming, but they are also sort of coming under pretty short notice. So once again, I think only thing certain about Trump is uncertainty. He's intrinsically unpredictable. Markets have to embrace for a lot of volatility and turbulence.
So if the daily risk profile is almost near, let's call it near binary, is it worth the headache, the stress, the high blood pressure to even remain invested? If you're not a day trader, for example? Well,
it really depends on your investment horizon, right? If you're a hedge fund, you're a day trader, you have to manage this sort of risk. And I guess that higher volatility is actually a good thing for a lot of hedge funds because they live a breath on more volatile.
Yeah, like this is their world.
Market.
Yeah,
that's right. I guess if you are more sort of a longer-term investor like Amundi, then you have to ride through these short-term volatilities and really focus on the logics and the sort of underlying themes of the market and the economy. You have to figure out what is the intention of these tariffs. Will China be able to offer concession to make Trump happy, and therefore tariffs will not be long-lasting? If China can't make that, then you are in for more sort of tensions and conflicts going forward.
All right, we'll unpack more of those ideas with Aidan Yao, who'll be rejoining us in a couple of minutes, Senior Investment Strategist there for Asia at Amundi Investment Institute. We are pointing north across some of these prices going into the open today, the Wednesday session. Just keep in mind again, mainland China remains shut. We're up 1% in the Asia Pacific, up 1.4 here on the Hang Seng Index. Plenty more ahead. This is the China Show. Good morning. Welcome back. Good morning. And what a difference 24 hours makes. Risk assets are bid just about across the board right now. Everything from equity markets to some of your EMFX space here, which really got hammered yesterday. I think the Taiwan dollar, I think is a case in point here, had the worst day since 2011, if I'm not mistaken, there on dollar Taiwan. 1.4% to the upside on the Hang Seng Index going into the open today. Tech is bid substantially. Interestingly enough, while we are in this sort of period of euphoria, Morgan Stanley put out this note, which we'll talk about later on. I'll just tease it right now. So they came out with a list of 29 stocks to avoid, given the risk exposure there and exposure to Trump's tariffs. And they came out with another list, short list of, I think, about 8 stocks. I'm just going to go through that here. Yeah, that are better positioned for the global supply chain over the next sort of 3 years or so. In fact, that's, some of those are coming up on your screen shortly. Well, on a separate note, of course, but included in that list, I have to caveat now, is Alibaba, which has been rallying, of course, of late. There's the DeepSeek angle to this. I should note that Morgan Stanley had Alibaba in their negative list as far as, some names to avoid because of the exposure there. SMIC, this is interesting. Stock has, tripled from the low of last year. So we're effectively now back to the highest, if not the highest, since the pandemic. There were several local reports out yesterday on some breakthroughs, unconfirmed, but this has really been one stock that's really just moved completely against the grain here. And a couple of other things too. Do we have that? Next up on your screens is really just a look at the approach as we, count down to the open. How long do we have? 3 hours? 3.5?
3.5 to tariffs, 3 minutes to the open.
There we go. Get on that phone. Stand by that phone if you're just waiting for that phone to call, because sometimes one person just once said...
Welcome back. You're watching The China Show. We're counting down to the open of markets, the second day of trading after that Lunar New Year holiday, at least for Hong Kong markets. Of course, mainland markets still shut. And we're sort of weighing this risk reversal story that we saw, tariffs coming in. We thought now a deal that has been done with Canada and Mexico, waiting to see whether something can be done with China.
Yeah, the complication there is, for one, to your point, right, it's a holiday in China still. Right. But that wouldn't prevent, I guess, some high-level conversations from potentially taking place. The other thing, though, is they don't share a border, right? So some of the concessions and promises that Mexico made to send troops there, that's really, I guess, in some ways, not literally on the table for China to do. But yes, let's see. Let's see what the next, 3.5 hours holds here. In the meantime, the markets are running with risk today. We're up, 2.3%. Now, here's what's driving the HS Tech Index there. Maybe case in point is bottom of your screens. You have Alibaba up about 3%. Wow, $97 now on that. Meituan and Tencent are up about 1.3 and about 2% each as far as that's concerned. Those stocks are concerned. Right, A50 futures also, so you don't have mainland markets are still shut. You do have some proxies still traded here in Hong Kong and Singapore, up about 1%. I'll be generous with that. Maybank is out with the notes. They see still the currency remaining weak on the back of the certainly uncertainty. Capital Economics is going a step further, and what they're saying is they're actually looking through all of this, and they're saying that expects any conversations, negotiations between Washington and Beijing will ultimately, like most of your relationships, fall apart. That's going to drive the exchange rate to 8 against the U.S. dollar. And the Journal reported yesterday, in case you missed that too, that China will be renewing its pledge not to devalue the currency on the back of maybe the export conversation. Right. A couple of other things too. We have Evergrande NEV so far out with some negative news here, unsuccessful in securing some of their strategic investors, so they're still looking for buyers to ease some of the liquidity issues there. HKBN is one stock that we're also tracking because they said they're actually still in talks with I Squared. A deal has not been reached. Just is the takeaway there. And Greentown was out with a profit warning. I think it's a 50% guidance they're coming out of the company. And PopMart, there we go, caught a surprise one there, is I think an upgrade coming through out of Macquarie. Price target, bottom of your screens, $95. So that's about a 12-13% projected upside. Maybe more than that. But anyway, some substantial upside there.
Yeah. Pretty good mental maths for first thing on a Tuesday morning.
Probably wrong, though. Well, my producers are about to tell me that's roughly accurate.
Yes. Meanwhile, Morgan Stanley, we have this list of nearly 30 Chinese stocks to avoid because of this tariff risk exposure. Among them, some of the names that are actually doing pretty well today, including Alibaba, also PDD. Bloomberg's Catherine Nye leads our Asia stocks team. She's here to help us explain and break down what we're seeing. Just, what are the highlights here for you?
I will say that every day seems like a new one, and it's, I mean, more so than ever these days because of just the whiplash that we're getting in markets. I mean, we have guidances in terms of, brokerages and buy side and sell side all saying, what they're looking at, what not, but it just, the news cycle is going so quickly. Yes, I think that a lot of people, as of this time yesterday, I think a lot of investors were really quite worried about sort of their exposure or companies that they had bought that have strong exposure. So here Morgan Stanley lists out PTD, top of the list, right? Alibaba, we're talking 10-20% of revenue from the U.S. and Canada and Mexico. Other big ones that they've mentioned, Medea, that's a big foreign, a company that's got a lot of sort of foreign buyers, foreign ownership, an onshore stock. I think Innolite is another one, 72% of U.S. revenues. I think that the news overnight just about the pausing or the delaying of such tariffs is kicking the can down the road. I think investors right now are trying to figure out how to reprice things and how to take on new risk as they're kind of worried about. I mean, we all knew that this was going to be kind of a whiplash of a year, of the next 4 years. How do you trade these things is hard. And I think the only thing that they can do right now is to look at what they can actually trade more fundamentally. I don't want to say on fundamentals. Look what happened to Alibaba yesterday, right? People were really excited about Alibaba because of their news in terms of their advancements in AI, and that really helped them and hurt a lot of their competitors who had been seen as leading. And so people are kind of trying to pick pockets of places where they think there's actually going to be some upside because of things like AI in his tech, possibly smaller diameter nanometers if that report on SMIC was true.
I was actually going to ask you about that too. Like these are some of the things that there's the macro conversation, but the DeepSeek one is really, I mean, Alibaba's part of that. What do we know exactly about SMIC and why the stock has just gone through the ceiling here?
SMIC has always been an interesting one, right? It's a sanctioned Chinese chip maker. It often gets bought because of the sort of the euphoria related to sort of what do you call it? Home buying, right?
China's independence.
Yeah, like it gets a lot of the extra emphasis or the boost spur because people want to buy domestic companies. So part of that is that, and obviously there was this report that they had this sort of 5 millimeter diameter chip or
I'm trying to look for that too, yeah, because the conflicting reports in that.
And it looks like, I mean, these kind of rumors and speculation, I think, is always going to drive markets up and down. But this is, I mean, obviously, people are excited about chips, right? This is really going to be a game changer when they get to something, smaller, when they get to the next spot. And that's why DeepSeek was such a big thing, right? It was the game changer. I mean, people are expecting to see these things. So this is definitely an area that people are watching and saying that there's actually going to be some sort of substantial monetary value that comes out of the development of this sort of next tech sector.
Yeah, I mean, look at it now. We're up 2% yet again here on SMIC. It's certainly been a winning trade, if rumors aside, I guess. All right, Catherine, thank you so much. Catherine Neither, who leads our Asia stocks team. Still with us here is Aidan Yao, Senior Asia Investment Strategist at Amundi Investment Institute. I guess let's put the tariff conversation with the China fundamental story. Can I make the assumption that any policy offset that China introduces will be much more potent than the worst-case scenario on tariffs?
I think so. I think two major determinants of China's economic and market trajectory this year is, number one, how the external dynamics are going to shift, and that's mainly tariff. And second one is Beijing's response to that external dynamic change. And between those two factors, I do believe that the domestic policy changes are a bigger driver of the market and the economy. So clearly, this is an area that we know that the tariffs are coming. It's just different scales that expected by different people, and the policy offset is very important. And that's why OIs are practically on the National People's Congress, waiting for that policy stimulus package to come through.
I want to also turn, I mean, investors really now focused on the MPC. That's where we're really expecting to see more concrete detail, although even that can be a bit thin on the ground. I want to ask, what do we actually need to see from the MPC to make investors happy? And I mean sort of a sustained momentum.
It's very difficult to know what exactly the market is looking for, but based on the surveys of economists, we know that the economists are looking for fiscal stimulus and more sort of stimulus gearing towards supporting consumption. I think the center of gravity is centered around sort of a 2 to 3% worth of fiscal stimulus. We are looking for 2% worth of the package. Half of that is coming from a widening of a fiscal deficit, half of that coming from the off-balance sheet bond quota from central and local government. Now, if you get that, I think the market will be reasonably content. I don't expect the market moving violently in either direction. If you get more than 2 percentage points, then I do think the market could pop, and vice versa. If you get a disappointment, the market could decline. Whether that's going to be enough to save the economy and get the economy on a sustainable path, no one really knows. I think we are crossing the river by filling the stones. You have to see how the economy reacts when these policies land on the ground.
Yeah, which means it's going to take some time, because it's quite a wide stream, really, if you use that analogy, right? What is the appropriate exposure now to China for an investor like yourself, for example?
We are taking a wait-and-see approach. So we have a neutral position on overall China equity. We have a preference for onshore market over offshore market for a number of reasons. Number one, by surveying our investors, talking to investors onshore and offshore, we feel that onshore investors tend to have a more positive sort of reading on the recent policy pivot than the offshore investors. Number two, we think that the onshore market will be more beneficial from the liquidity support of Beijing, PBOC, as well as the national team. We also think that onshore market, given the historical sort of a performance relative to offshore, they tend to be more resilient against the external tensions, the geopolitical events. And finally, if you think that this round of the policy package is going to be more consumption, domestic economy oriented, then onshore listed companies tend to be more sensitive to domestic economy. So that's also a reason that onshore market should perform better than offshore market.
For an investor with a longer-term horizon like you, what does it take to move you from neutral into overweight China?
So we need more clarity on the policy sort of framework and reaction function. Obviously, China is facing a combination of short-term cyclical problems as well as a number of longer-term structural issues. So MPC could deliver on the short-term stimulus packages, so that will help you to address some of the cyclical problems. But it could also sort of come out with a blueprint, a sort of a longer-term policy structure to deal with some of the longer-term cyclical issues like demographics, like debt issues, and also sort of getting China out of the deflationary sort of a situation and deal with the potential further U.S. and China decoupling. So I think, if we get more policy clarity that these policies are moving in the right direction, bringing the economy on a more sustainable path, then that would be very positive for a lot of skeptical investors to take a long position on China.
Does the U.S. market need to correct substantially for Chinese markets to do well?
I don't think so. We have an expectation of a soft landing for the U.S. market. So U.S. growth is going to sort of migrate downwards to that 2% mark. And in relative terms, Europe growth is going to accelerate. The Japanese growth is going to accelerate. EM growth is going to holding up. That means that the relative U.S. exceptionalism will fade. But this is still a very strong U.S. economy, so it doesn't have to crash for the capital to rotate out of U.S. Into China. I think a lot of people are concerned about high valuations of U.S. stocks, and if China's situation can improve, valuations is below historical average and certainly below to peer markets, some of that rotation could actually come to China. So China could relatively outperform U.S., but it doesn't need the U.S. to crash to bring that China long story out.
Aidan, Senior Investment Strategist for Asia at Amundi Investment Institute there. And you can also tune into your Bloomberg for more on this. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. There is plenty more ahead. Stay with us. This is Bloomberg. Here are some of the big corporate stories that we are following today. A U.S. court has been told that former U.S. President Joe Biden unfairly blocked the proposed $14 billion merger of Nippon Steel and U.S. Steel. The companies are suing, claiming a review by the Committee on Foreign Investment was a sham and violated their rights by not engaging with them. Both companies are seeking a new review. The European Union is said to be preparing an investigation into e-commerce platform Shein over selling illegal products. The European Commission will lead regulators in a coordinated action against the Chinese-founded online marketplace, with any fines decided by national governments. Chinese-owned Temu and Apple also faced similar actions last year.
Now, Tata Motors is keeping a close eye, and again, we're talking about Donald Trump and the trade policies, again, dominating proceedings here, and really the possible, at least their possible impact on its crucial market, which is China. Now, the CFO told us exclusively that they are ready to reassess their business strategy if it's necessary.
I think this is the new normal that we are trying to comprehend as we speak, because things are coming thick and fast, so we need obviously time to process the changes, and more importantly how the response happens, not just vis-a-vis country to country, it's also in terms of what happens to financial markets, what happens to currencies. So I think from our perspective, we are trying to keep it clear and focused, otherwise we'll end up panicking everywhere. Let's take one at a time. If I look at the UK market, which is one of our, because we are an exporter out of UK, the balance of payment UK versus US is the other way around. US exports more into UK compared to the UK to the US. So frankly, I believe this is the task. I mean, this is the data pattern at this point in time. How does that get comprehended? How do people deal with it? We'll have to wait and see. And as far as our exports into China, the domestic market in China itself is concerned, I think the premium luxury business has been reasonably healthy. At the same time, yes, there have been stresses in the last 1 year in the Chinese market, and therefore we are watching it closely. And our plan of action is to ensure that we stay relevant to our customers in that particular market. And so far this year, JLR has performed better than any other player in the market with respect to the supply, the sales that we are doing in that particular market. And we need to ensure that both the product offering as well as the dealer remuneration that we are able to secure in that market is remunerative for the dealers. So let's watch the place. And from our perspective, we'll also want to do is keep the innovation intensity high so that the customers still feel attracted to our products. Price is just one variable in the grand scheme of things. We need to ensure that we increase the degrees of through which customers assess us. That's how we are approaching it.
But have you reassessed your strategy in light of the tariffs? I mean, have you made changes, for instance, to your strategy?
Not yet. Not yet.
But you may?
We will keep a watch on it. We need to understand how it is going to play out. And obviously, you wouldn't want to overcorrect on this front because it's also a moving target at this point in time. Let's wait for the data to emerge and then we'll obviously course correct if needed.
We know that demand in China has been pretty lackluster and the US market has been able to counter that.
That's right.
Do you see that continuing? What kind of trends are developing?
See, at this point in time, that is the situation, and I believe US will continue to do well for us. And the products are good, and the launches that we are seeing, because earlier, if you go back to the portfolio that we had, the biggest successes for us was Range Rover and Range Rover Sport. The launch of a Defender has actually given us a third leg in that tripod. And as and when we fix and correct and launch Discovery, then that'll be the fourth leg of a proper stool that we will be having. So in that, I think the Defender portfolio is now adding to the additional volume that we're getting out of US, which is also compensating for the relative weakness that you're seeing in China. But we believe that will also change as we go forward because China is going through its own corrections, and therefore when it comes back again, we hope to have two markets that are firing in parallel, China and US, but let's wait and see how early it comes. But that's not all. We are also seeing the UK business coming back because UK business had a challenge on insurance and thefts that was causing us grief last year. Now that is behind us because the technology has been fixed and now we're getting insurance back into the fold again. We also set up our own captive insurance reinsurance to take care of that. So that price discovery is out there. So that's giving UK back into the action. And the kind of launches we are seeing on the Range Rover and Range Rover Sport, the products have done so well. Middle East is becoming an important market for us as well. So I think as the business is getting more and more catering to the premium luxury customers, these people are a sliver that goes across the entire world. And they are responding to the products.
So now different sources of growth.
Different sources of growth are starting to come through. That is balancing the portfolio, which is the reason if you look at the last quarter, we delivered our highest ever Q3 EBIT margin of 9%, which has never happened for the last 10 years as far as JLR is concerned. So we are on the right track on JLR. The key shift that has happened compared to the JLR of the past is the pivot towards premium luxury. It is a brand-led growth. It's a luxury customer that we are dealing with, and the vehicles are actually delivering to the promise that we are putting to the customer. So that's giving us the confidence that whatever may be the storm out there, we should be able to weather it well.
Tata Motors CFO PB Balaji there, speaking exclusively with Bloomberg's Insight anchor Haslinda Ahmed in Mumbai. And there's more on India later in the show when Edelweiss Asset Management tells us why the Modi government's budget is set to energize consumption at a critical time for the economy.
Just a brief look at markets right now. So a couple of things. We're looking at, as you can see, this rally taking place across Chinese assets, which it's getting a bit of traction right now. In fact, we were up as much as 3%, if not more on that, on the HS Tech Index. Interestingly enough, so there's a rally even before this headline dropped, and I'm just very careful to attribute it, but it might be something, and as you can see, some strength is coming through on the Chinese currency after this bout of weakness the last few minutes or so. So Donald Trump, in a Truth Social post, effectively talk, and there's not a lot of detail here, right? So great interest in TikTok is what he said, would be wonderful for China and all concerned. The reason that might be material information is markets are looking for any clues as we approach this deadline that's coming up in just over 3 hours from now, if they are able to come up with something of a détente on this tariff conversation. So We're not saying this is, but markets are just grappling with any information they have at this point.
I think that's absolutely right. After seeing the sort of last-minute turnaround overnight, of course, for Asia traders with Canada and Mexico, there is this real hope now that maybe there is a deal to be done with China. Donald Trump has clearly highlighted the fentanyl issue. Perhaps it's an off-ramp that he's handing to President Xi that, you know, we'll see whether or not Beijing is willing to take that up.
Yeah, we'll find out, really, if and when, if at all. We have 2 out of the 3, as Rebecca was pointing out, Canada and Mexico. That's enough to drive the risk rally we're seeing across the region. If we do get something out of China, expect this rally to rally even further. Plenty more ahead. This is Bloomberg.
Now for another quick check of markets, just looking at another Chinese property name. We're talking about Greentown earlier. Now Sino-Ocean higher about 18% or so. And it's really off the back of winning this approval in the UK for its debt restructuring plan to restructure about $5.6 billion worth of the company's debt after the default back in 2023. Just for timescale here, 2 years of, well, less than 2 years of negotiation is actually relatively little time compared to what we've seen for some of the other Chinese developers.
Yeah, well, some markets are cheering that one on, up about 20% at one point there. Okay, we're also looking at some of the relief rally. Speaking of a relief rally here on the tariff front. So yesterday, almost across the board, if not across the board, auto stocks across the region, not just in China, took a massive hit on the back of the tariff issue right now. And that relief rally is playing out, as you can see, in Chinese names. I can tell you Japanese names are also rallying substantially today. We'll have plenty more ahead, of course, on all the market action taking place as we count down to the deadline winding up. Welcome back to the China Show. We're entering the, 30 minutes into the cash market session. Mainland markets are still shut. The second hour of the program is just ahead. We're counting down to, well, the deadline, of course, expires on the tariff front with China. So in about 3 hours from now, we'll talk more about it in a moment. And if we do manage to get something, of course, would further galvanize this already existing rally, as you can see on your screens, 2.5% on the Hang Seng China Index, 2% on the Hang Seng Index, up 3%, if not more, on the Hang Seng Tech Index. In fact, Chinese benchmark coming up on your screens. There we go, 3.7% now. This rally taking place as far as Chinese tech is concerned. And we're flat on the exchange rate. That seems to be maybe, I'd argue, the better proxy of the macro concerns out there on trade. Of course, other themes involved when you look at Chinese markets, like the deep-seek conversation taking place still. Hang Seng Index up the most since December. HS Tech is up the most since December as well, and should be at the highest level since the first week of October. Right, we're looking at, the broad rally is 6,050 and change on S&P futures. We're right at about the, yeah, there we go. Yeah, okay, okay, so we're doing well on this, and we're doing well on the next board coming up on your screens. Yeah, let's get to the bottom of things, and yeah, Rebecca.
Yeah, I mean, laser-sharp focus really on this tariff story to some of the point of some of these charts here. I mean, Mexico, Canada, we've had deals on both. We're awaiting a potential deal with China about 3 hours off from the deadline there. President Trump saying that his administration may speak very soon with China, trying to seek a deal to avoid this threatened 10% universal tariff. Let's bring in our Chief North Asia correspondent, Stephen Engel. Yeah, we're counting down. Any sign of how Beijing is going to react?
Yeah, I think a lot of people woke up this morning in Asia Pacific and said, oh, there's been a deal reached with Mexico, there's been a deal reached with Canada, and then China's next, right? Just get on the hotline and the two gentlemen can talk and come up with some sort of reprieve for China. It's not going to be as easy as that. It's not necessarily like China can pledge border officers to come in and tackle the fentanyl problem overnight. Keep in mind, these 10% tariffs that are threatened and to be imposed in less than 3 hours' time is about the fentanyl issue. It's not about the trade imbalances. It's not about illegal immigration, really. It's about fentanyl trade. Now, Biden administration did have, or Joe Biden did have an agreement with Xi Jinping on the sidelines of APEC to set up a anti-narcotics, a counter-narcotics working group. There were small victories, but is it the moves that Donald Trump wants? He essentially wants the Communist Party of China to come in and say, we are stopping this. We are using absolute control from Xi Jinping and putting a stop to this illegal precursor of manufacturing in China. Well, that's going to be a very difficult situation and very difficult call for Xi Jinping to make without, obviously, deep negotiations. And I think what's likely to happen is that tariff is going to happen in 3 hours' time, and then negotiations, and that phone call will probably happen afterwards, because Donald Trump has said it will likely happen, that phone call with Xi Jinping, within 24 hours. White House spokespeople say it could happen within the next couple of days. Well, that's already past the deadline.
Steve, thank you. Stephen Engel, our Chief North Asia correspondent. Let's bring in Mark Cranfield right now to take us to the market reaction and action taking place right now. Mark, I was going to ask you about what's happening in the currency space, but what's happening in Hong Kong is forcing my hand here. What's going on in your mind?
Well, I think it's exactly as Rebecca was suggesting earlier, is that people have woken up and they've come to the conclusion that, well, if Canada didn't get tariffs immediately, if Mexico had a flip-flop as well, then China's going to be the next. They're not even going to have the tariffs imposed in a few hours' time as expected. So people are very optimistic that there's room for Chinese equities to rally. And that's why you got the tech gauge in particular is the one. So it's not just purely about the tariffs. Obviously, what's also helping there is you've got companies like Alibaba, who clearly are seen to be a beneficiary from the DeepSeek developments in China itself. So you've got a company like them, their earnings are out later in the week as well. People will be very optimistic that they will continue to do well, plus some of the other tech names as well. So that's part of the driver. Potentially, there's going to be a delay to the tariff story there as well, announced in the next couple of hours. So people are optimistic about that. And of course, in the background, you've got some people saying that all of this together, all this pressure coming from the United States, from Donald Trump, is going to be the thing which galvanizes the Chinese authorities to finally bring out the big bazooka in terms of stimulus for the Chinese economy. So they're going to come back from the Lunar New Year break, and China will have its own announcements to stimulate the economy, regardless of what is happening on the tariff front. So if you put all that together, it's certainly a reason for people to feel good about the market today. Of course, if Donald Trump in a couple of hours' time does slap big tariffs on China and says that they're going to stay for some time, everything could unwind pretty quickly.
I mean, Mark, to your point, the second bit of your clause there is really important. If he says they're going to stay for some time, because there's also this scenario that they come on, but a deal is done quite quickly and they're lifted. So either way, the market is still grappling with this very far sort of risk reversal problem. I'm interested in how investors are actually able to play that, and also whether or not, or how we see that reflected in the currency and the sort of potential flip-flopping and sort of disorder in the currency.
Well, I'm glad you asked, because it gives me a chance to talk about the euro. So yesterday we had some huge swings in foreign currencies around the world. And of course, people were very focused on the Canadian dollar, the Mexican peso, the Chinese yuan. By far, the biggest trading in the world yesterday was in the euro-US dollar cross. And day traders, they loved Donald Trump because we had a 400 pip round trip on huge volumes. That's staggering. This is the most heavily traded currency pair in the world. It went down 200 pips and came all the way back up 200 pips in the space of less than a day. That is massive intraday trading. So the guys who, particularly people like retail punters especially, who love pushing around, you can see them in the equity market. They're a very big contributor to stocks like Nvidia and Tesla. They love day trading. We've even got these one-day options, which the US introduced recently as well. So people who like short-term volatility, who like to trade off of headlines, who like to respond quickly to changes in momentum, they are absolutely having a great time. Much more difficult for your long-term portfolio investors.
Yeah, Mark, that's a good point. In fact, I'm glad you brought it up. So, you know, on a typical day, and this week hasn't been anything but typical, you know, the euro is one of the first things I look at on my Bloomberg screens to get a gauge of what risk appetite is like compared to, say, when I went to bed. Because of everything that's taken place, is the euro currently a good risk indicator?
It always is, because it is by definition the US dollar. When people talk about what's your view on the dollar, where is the dollar going? If you're thinking about the G10 space, really you're talking about the euro. That is the one that defines the mood for the G10 currencies. It defines what is going on in a big picture macro view of how traders think about the US dollar and everything related in terms of interest rate policy, fiscal policy. It's all there in one place. And you've got, in the background, you've got two enormous trading partners, United States and Europe as well. From time to time, the yen is a very important currency as well, but there are so many dynamics specific to Japan, especially right now. They're trying to change interest rate policy and the currency is relatively weak. But on a day-to-day basis, if you want to tell people, if you want to show somebody this is what's happening with the US dollar, you just look at the euro-US dollar cross rate.
Fantastic. Mark, final word on U.S. equity markets, which obviously recovered overnight. We heard from, and I'm sure you've seen the story, Mark Kolanovich, of course, was with our colleagues in the U.S., talked us through some of his scenarios. You know, timing is clearly difficult here, but he's also flagging the probability, and I'm not sure what he's attaching actually to the probability here, of potentially a 4,000 handle on the S&P. It's not just him, right? Goldman Sachs came out with a note saying that earnings are exposed here to tariffs. RBC, I'm reading this note here. The tariffs raise the risk of a 10% equity drawdown in the United States. Mark, if you had to fancy a guess, the next 15% move on the S&P 500, up or down?
I think it'll be lower because I think at some point this year, the narrative that the US is an exceptional market will break. I think all of these uncertain policies, the fact that the Federal Reserve may have to go on hold for a long time, you get reactions from other countries to the tariffs as well, all of that, plus the fact that everything is priced to perfection, really. You've got American companies, especially the tech sector, trading on very high valuations, and there's a threat from Chinese AI as well. To me, it suggests that there's way too much priced in. The American exceptional story cannot last. It will break down. And when it breaks down, the US dollar will decline, equities will decline. It will be a big story. Timing it is very, very difficult. But I think it's coming this year, and that will mean that US equities will end up going lower.
Mark, the end of US exceptionalism there. Thank you so much for joining us, Bloomberg's Mark Cranfield, MLive strategist there. And still ahead on the show, we'll cross over to our studio in Mumbai to hear why Edelweiss Asset Management thinks India's budget addresses the need of our consumption. Consumption there. Stay with us. We'll be going to Mumbai soon. This is Bloomberg. Welcome back to the China Show. We're focused on our top story today. President Trump saying his administration plans to speak with China, and that comes as he has this threatened 10% tariff hike set to take effect in about 3 hours or so. Let's bring in John Gong, professor at China's University of International Business and Economics, who joins us from Beijing. I mean, John, I just want to ask the obvious, which is we've seen a deal be done to offer brief reprieve for Canada and Mexico. Can Beijing cut a deal with Trump in time, or let's say in the next few hours?
Well, my view is that if they're trying hard enough, it's possible. I'm saying it's possible. But let me be very honest here. I think the situation with respect to China is way more complicated than the situation with respect to Canada and Mexico. On the surface, President Trump just mentioned one thing, that is the fentanyl. Fentanyl, from China's perspective, is easy to address. I mean, it can kill the whole industry within days. But I think it's more than that. For example, there are various reasons that the Trump administration wants to impose tariffs on China, including, for example, the strategic decoupling, the reshoring incentive, the drive to establish external revenue service as a substitute for income tax, stuff like that. But I think in the near term, one thing President Trump didn't mention in public, but I would bet that will be part of negotiation, is with respect to issue in Ukraine. United States definitely wants some cooperation from Beijing with respect to this conflict in Ukraine. It wants China to stop buying or stop selling things with Russia. And this is something they can't mention this in public because it's going to put Beijing in a very awkward situation. But I would bet that it's going to be coming up in the negotiation in the next few hours, if not it's already happening right now. And this is a very difficult decision from Beijing's perspective. We have to see what's going to happen. My guess or my hunch is that they probably won't make a decision within the next few hours. It was announced that they will spend a few more days to talk about these things. So the tariffs will be put on hold temporarily. But we're going to see what's going to happen next.
Yeah, John, that's interesting because we're looking at this countdown, and it's a real countdown, right? So it's about 3 hours away from that imposed deadline from Donald Trump. If, in fact, we do cross that without a deal, it's not as if, and we know what Donald Trump's like, it's not as if he can it's not as if he can't change it once it comes into effect, right? Can you be more specific, I guess, of the potential short-term concessions that China might be willing to just talk about, for example, to simply buy time?
Yeah, well, I think there are things that China can do and there are things that China draws a red line. I would, my bet would be depending on whether that alleged phone call between Trump and President Xi would take place. If that indeed happens, that's good news, I would say. And we don't know the details. We're all speculating here, but I think behind the scene, there are serious negotiations with respect to very strategic issues, in my view, particularly with respect to the conflict in Ukraine. President Trump desperately needs to end that war, and I think it's very difficult for him to achieve that goal without Beijing extending some help.
John, do you think the fact that this time around President Trump seems willing to impose tariffs on U.S. allies, does that change how Beijing perceives tariffs overall? And does it help Beijing's case that they've tried to make that China is sort of this bastion of trade that, perhaps the U.S. no longer is?
Well, I think this is a very complicated question. The question really boils down to whether tariff is a means to an end or it's an end by itself. In some situations, it's clear that it's a means to an end. For example, the situation with respect to Canada and Mexico, is using tariff to achieve some other goals. In other areas, I think tariff is the goal, actually, is the means. Is the end, because he has this strong conviction that somehow tariff can be used as a substitute for income tax as part of the federal budget tax revenue, and he thinks that in his world a tariff is something part of his policy, grand policy. The five things. He used to talk about income, cutting taxes, that's income tax, cutting spending, regulatory reduction, tariff, these kind of things. So the tariff by itself could be the entire end from the Trump's perspective. So I think it depends on which country is talking about. I think in the case of China, tariff could be the end, that he does want to have strategic decoupling with China for various reasons. At least from whether being from perspective of balancing the trade or just entirely cutting back the Sino-U.S. trade altogether.
Yeah, okay, that's an important consideration because, you know, we tend to get lost in the near-term noise. So I guess let's look at the other side then. If, in fact, we do get tariffs kicking in, two related questions. How does China respond in kind? Politically, they have to do something. And how do they respond to make sure the economy doesn't feel the impact of that?
Yeah, well, this is actually a very good question. Suppose the tariff does kick in. My speculation is that you're going to see a very measured response from Beijing. I mean, initially when this thing was announced, I think the response from Beijing is very muted, right? I mean, it doesn't announce any retaliatory measures as what Canada and Mexico have done. It just said that China's firmly opposed to this and then file a case at WTO. So it's actually a very measured response. But even if the tariff kicks in, I would still guess that it would be, again, a measured response because we learned this lesson from the first trade war during the first Trump administration that, the escalation of the tariffs and the trade war doesn't bode well for both sides, particularly for China's case. So I would say, if that's the case, that's going to happen. Now, with respect to the impact on China's economy, I would imagine that 10% tariff is not going to cause a huge impact because, China's exports to the United States only constitute, I think it's less than 15% of total exports. And Chinese companies have already been preparing for this. There are various ways of getting around the tariff, including investing in the United States. So I think the overall impact on China's economy is going to be very insignificant. I mean, not insignificant, but not going to be a major impact. And China can withstand that. So I would say if the tariff is indeed imposed by 10%, so be it.
John, I want to ask, is there any potential win that China can give Trump?
Well, I think at least on fentanyl. The fentanyl issue, as I said, is something that's very easy to address. And as a matter of fact, I think Chinese government and the United States government have already been cooperating on combating that issue. I think compared to several years ago, the flow of fentanyl to other countries that eventually go to the United States have already been curtailed greatly. Compared to a 10% tariff on Chinese exports to the United States, I mean, even the entire termination of the fentanyl industry in China is totally worth it. So I don't think that's going to be a big deal. I think on the fentanyl issue, China can do a lot of things. I mean, everything I would say to make President Trump happy. That's a no-brainer to me.
John, as a final question on a, I guess, separate but related note, how's the economy doing? What are you seeing on the ground in Beijing?
Well, I think you look at the statistics so far during the Spring Festival, I think things are starting to get better. People are starting to spend a lot of money. Especially, I was quite pleasantly surprised to see the box office revenues being, shooting through the roof. A few days ago, I was trying to book a ticket to go to the cinema, and I can't even find a ticket. It's fully occupied, the theater. So I think, from some ad hoc evidences, it looks like the economy is starting to bottom out, if it's already been bottomed out. At least I think the fourth quarter numbers are fairly decent. And moving forward, I would imagine that this momentum hopefully will continue. The big uncertainty is, again, Washington. I think President Trump's tariff policies, China's exports to the United States, if a very large percentage of tariffs are imposed, is indeed going to have a huge impact on China's economy.
John Gong, thank you so much, professor at the University of International Business and Economics, joining us out of Beijing this morning. You can turn to your Bloomberg for more on the story taking place. TLIV Go to get commentary analysis from Bloomberg's expert editors, and we're looking at a market here in Hong Kong that is rallying substantially. We're up now nearly 5% on the Hang Seng Tech Index. So Bernoulli's principle is alive and well when you look at equity markets here in Hong Kong. Plenty more ahead. This is Bloomberg. Wow, okay, this rally is really gaining traction. So in the last couple of minutes or so, we've tacked on slightly more points to the upside here. So we're now nearing 5% on the Hang Seng Tech Index. We're nearing 4% on the Hang Seng China Index. Just keep in mind, mainland China is still shut, right? So this is really, well, mainly on normal days. Today, the only almost main avenue that investors have really to express perhaps optimism over a potential tariff deal over the next few hours or so. So watch it very, very closely. And obviously, here's the plug. Keep tuned into the China show. We're looking at Toyota, XPeng, and Hyundai. Automakers are feeling the tailwinds here. These, just keep in mind, these were the names that really took a big, big hit on Monday, on really the opposite side of that headline. And now that we're here, relief rally, except for Mitsubishi Motors, which effectively is an earnings story there and an outlook story. We're about a third into the Tokyo earnings season. More on that in a moment. But in the meantime, markets are rallying substantially this Tuesday. It's just a minute to the Tokyo lunch break right now, and we're headed into that really on fairly solid footing here across most of the major benchmarks there. The yen is trading near, if not at session lows here. The dollar is making a comeback, of course, last few hours or so following the reversal down. Overnight, 10-year yield in Japan, 1.27%. Asia-Pacific, as you can see, is roundabouts there. The same amount of gains we're seeing on the Nikkei 225. Asia, broadly speaking, just about every single sector, with the exception of real estate, on the way up. S&P futures are tacking on slightly even more gains. The main story, though, not very visible on your screens, is really this rally taking place in Chinese markets. In Hong Kong, mainland markets are still shut. Hong Kong is up, get this, 4 to 5% on the benchmark basis. So we'll see if this lasts.
Yeah, I mean, and sticking with this US-China story, Secretary of State Marco Rubio has told Congress that the US Agency for International Development may be abolished after a review. According to a letter seen by Bloomberg, Rubio wrote that the current foreign aid process does not benefit the American people. He says some operations may be integrated into the State Department, with others shut down. Just take a listen.
I'm the acting director of USAID. I've delegated that authority to someone, but I stay in touch with him. And again, our goal was to go in and align our foreign aid to the national interest. But if you go to mission after mission and embassy after embassy around the world, you will often find that in many cases, USAID is involved in programs that run counter to what we're trying to do in our national strategy with that country or with that region.
And Min Lo, our China correspondent, is with us right now for the details here. Min.
Yeah, well, so there is a lot of uncertainty now as to what would happen at the end of this 90-day period after President Trump signed that executive order to freeze funding for 90 days. So, of course, it's a rude wake-up call for many of these recipient countries of U.S. aid that now find themselves, having funding cut off. Tens of thousands of jobs at risk because USAID tends to implement their programs through local contractors. So they indirectly support tens of thousands of jobs across the globe. And of course, these countries finding themselves having to deal with public health crises that are now on their hands. And it's really about saving lives, fighting infectious diseases and the like, but it's also about projecting U.S. power and influence because U.S., for example, has been able to gain access to military facilities in the Philippines because the U.S. aid has been able to fund programs close to those sites to sway public opinion. And so now, by freezing that funding, it does open up a space for other countries like China to move in to possibly kind of fill that gap there.
I mean, to your point, Min, there is this more fundamental question here about what role the US plays. Is it still the world's policeman, for example? Is it still a bastion of free and open trade? These are questions very much up for grabs. And it seems as if this is perhaps an opportunity for Beijing to step into that field and step into that gap.
Exactly, and the State Department did put out a statement saying that they're no longer going to blindly dole out money that doesn't serve American interests. And China, on the other hand, we know, has been using every opportunity to position itself as this champion of the global South, putting in a lot of money, resources, energy. The China-Africa Cooperation Forum is one example. And there you can see on the screen that U.S. is the largest donor of foreign aid. Ukraine is a big beneficiary. So what happens to all that aid that goes to support Ukraine is a big question. And of course, China's aid to foreign countries often come in the form of these government-backed loans for infrastructure investment, and they have invested $1.3 trillion worth of these loans in the 2 decades since 2000 until 2021, and that amount really dwarfs what the U.S. has been spending, just $50 billion in terms of such investments. And so of course, experts are saying that maybe China wouldn't be moving in to fill that multi-billion-dollar gap because China's economy is raising questions about whether China can continue to spend big. But still, last year, China did pledge a very substantial amount, about $50 billion in these loans for the next 3 years. So still a very big player here to expand their influence in the global south.
Bloomberg's China correspondent Min Lo there. Now, drugs were among Donald Trump's top concerns when he threatened tariffs on China, Canada and Mexico. And in particular, he says Beijing hasn't done enough to stem the drug trade. But Bloomberg opinion columnist Karishma Vaswani thinks using tariffs to bully countries will only backfire. She joins us now from Singapore. I mean, Karishma, first, just explain the thesis. Why will we see this backfire?
Well, in the short term, Rebecca, I have been slightly proven wrong because what we have seen is a retreat from the initial positions from Canada and Mexico, at least, in terms of what they said they would do. There does seem to be some sort of negotiation that has taken place behind closed doors. And for the moment, Donald Trump looks like he's achieved what he has set out to achieve. And I think that will certainly play well back at home with domestic audiences. And let's not forget, that is the key audience that he is playing to. They will see this as an example of a leader that is being tough on crime, being tough on drugs. And, interestingly, as part of the column that I wrote today, one of the key points that I found particularly notable was that clamping down on the fentanyl trade was one of the key issues for American voters ahead of the election, and something that he is obviously paying a great deal of attention to. But the point is that this is all in the short term. In the long term, what this does is it reduces the reputation of the United States as a reliable partner on the international stage to do business with, and a country that frankly looks like it's receding from the global stage rather than wanting to play within the rules and the framework of the architecture that was actually set up by the U.S. in order to have the kind of free trading environment that we've had over the last 40 years.
This sounds like an opportunity for the Chinese to step into.
Yes, and, I can't read President Xi Jinping's mind, but certainly if I was an advisor right now to the Chinese government, that's certainly something I'd be watching very closely. I was listening to our colleague Min Lo just now talking precisely about that in terms of the vacuum that is currently apparent when it comes to foreign policy, USAID, for instance. And it's something that the Chinese have consistently talked about ahead of Donald Trump, during the Biden administration as well. They've positioned themselves as the true leaders of the global south. There is that alternative model that is on offer, an authoritarian model that also provides huge economic growth, and we can't discount the fact that we've seen that in China. But I think what will be really interesting is, the contents of the discussion between Xi Jinping and President Trump and what that yields. Whether or not the Chinese or the idea of strategic competition with China, between China and the United States, takes a back seat to the transactional approach of doing business, doing politics and foreign policy making that we've seen from Donald Trump just in the first 2 weeks of him being president. And I think we can't, emphasize that enough. I'm sure that you remember what it was like during the first Trump administration. I certainly do, waking up to foreign policy by tweets. And now it's a very sort of similar environment where countries are having to face collateral damage, trying to figure out what their next move is.
Karishma, will we see the Chinese, do you think, offer President Trump some kind of win here?
Well, it would be an easy win, Rebecca, in my view, and I have written about this before, that if Beijing wants to give Donald Trump what he wants, then they should clamp down on the fentanyl trade. It is certainly absolutely true that a huge number of devastating deaths have taken place in the United States due to fentanyl, and he is absolutely right to want to clamp down on the fentanyl trade. It is also true that the Chinese have not yet done enough in terms of trying to crack down on organized crime within their own borders, and also what are called precursor chemicals, the effectively, in layman's terms, the raw materials that go into fentanyl, which is hugely addictive. It is a massive issue domestically, and it is something that the Chinese could work towards to try and find a way to cooperate with Donald Trump. But it's also really difficult, Rebecca, I think you will agree, to do this kind of cooperation down effectively the barrel of a gun with 10% tariffs, hanging over your head. So I think for the Chinese, it would make sense to say we want to cooperate on fentanyl. We want to try and crack down on this, but they're going to have to get something in return. And they've been very clear about what they want that to be. They've been clear in the past. Red lines like Taiwan, for instance, the fact that they see the South China Sea as an internal Chinese issue rather than one that is up for grabs in terms of U.S. foreign policy. I'm really keen to see what will be on the negotiating table between Donald Trump and Xi Jinping, and we should find out in the next few hours or so, shouldn't we?
Yeah, well, hopefully that's what markets are certainly investing around, the hope that we will. What about other countries, Karishma? What should other countries, allies or rivals do?
Yeah, I think what they need to do, and I think increasingly what they're doing, is to get their Trump 2.0 game plans in order. I was speaking to an Asian diplomat last week who had said to me, privately, obviously, that we're used to this, right? We know how to deal with Donald Trump. We dealt with him in the first administration. So we're going to get our ducks in a row, and we're going to see which countries are likely to be targets in terms of the trade war, and start handing out or being able to negotiate ways and give him things that he wants. And I think it is this transactional approach to foreign policy that is going to be the tone and tenor of the next 4 years. Now, as I've written about in my column, fine, that works in the short term. What that does is it tells the world that this is how the U.S. does business. Donald Trump wants to show the world that he is boss. In the long term, it damages the reputation of the United States as a reliable partner, and it certainly makes countries like China think where there's a leadership vacuum, there's the possibility for them to step in.
Karishma, fantastic. Karishma Vaswani there, our Bloomberg opinion columnist. And by the way, for our Bloomberg clients and viewers, you can read more of Karishma's piece on the terminal. It's also on Bloomberg.com. Right, plenty more ahead. This market rally is gaining even more steam as I speak. More on that in a moment. Welcome back. Let's talk more about the business implications here of Trump's trade policy. So we spoke with Tata Motors. They're keeping a close eye, certainly, on what's going on there and their possible impact on particularly the company's crucial market in China. The CFO told us exclusively that they are ready to reassess their strategy if it's necessary.
I think this is the new normal that we are trying to comprehend as we speak, because things are coming thick and fast. So we need, obviously, time to process the changes, and more importantly, how the response happens, not just vis-a-vis country to country, it's also in terms of what happens to financial markets, what happens to currencies. So I think from our perspective, we are trying to keep it clear and focused, otherwise we'll end up panicking everywhere. Let's take one at a time. If I look at the UK market, which is one of because we are an exporter out of UK, the balance of payment UK versus US is the other way around. US exports more into UK compared to the UK to the US. So frankly, I believe this is the task. I mean, this is the data pattern at this point in time. How does that get comprehended? How do people deal with it? We'll have to wait and see. And as far as our exports into China, the domestic market in China itself is concerned, I think the premium luxury business has been reasonably healthy. At the same time, yes, there have been stresses in the last 1 year in the Chinese market, and therefore we are watching it closely. And our plan of action is to ensure that we stay relevant to our customers in that particular market. And so far this year, JLR has performed better than any other player in the market with respect to the supply, the sales that we are doing in that particular market. And we need to ensure that both the product offering as well as the dealer remuneration that we are able to secure in that market is remunerative for the dealers. So let's watch the place. From our perspective, we'll also want to do is keep the innovation intensity high so that the customers still feel attracted to our products. Price is just one variable in the grand scheme of things. We need to ensure that we increase the degrees of through which customers assess us. That's how we are approaching it.
But have you reassessed your strategy in light of the tariffs? I mean, have you made changes, for instance, to your strategy?
Not yet. Not yet.
But you may?
We will keep a watch on it. We'll need to understand how it is going to play out. And obviously, you wouldn't want to overcorrect on this front because it's also a moving target at this point in time. Let's wait for the data to emerge and then we'll obviously course correct if needed.
We know that demand in China has been pretty lackluster and the US market has been able to counter that.
Right.
Do you see that continuing? What kind of trends are developing?
See, at this point in time, that is the situation, and I believe US will continue to do well for us. And the products are good, and the launches that we are seeing, because earlier, if you go back to the portfolio that we had, the biggest successes for us was Range Rover and Range Rover Sport. The launch of a Defender has actually given us a third leg in that tripod. And as and when we fix and correct and launch Discovery, then that'll be the fourth leg of a proper stool that we will be having. So in that, I think the Defender portfolio is now adding to the additional volume that we're getting out of US, which is also compensating for the relative weakness that you're seeing in China. But we believe that will also change as we go forward because China is going through its own corrections, and therefore when it comes back again, we hope to have two markets that are firing in parallel, China and US, but let's wait and see how early it comes. But that's not all. We are also seeing the UK business coming back because UK business had a challenge on insurance and thefts that was causing us grief last year. Now that is behind us because the technology has been fixed and now we're getting insurance back into the fold again. We also set up our own captive insurance reinsurance to take care of that. So that price discovery is out there. So that's giving UK back into that action. And the kind of launches we are seeing on the Range Rover and Range Rover Sport, the products have done so well. Middle East is becoming an important market for us as well. So I think as the business is getting more and more catering to the premium luxury customers, these people are a sliver that goes across the entire world, and they are responding to the products.
So now different sources of growth.
Different sources of growth are starting to come through. That is balancing the portfolio, which is the reason if you look at the last quarter, we delivered our highest ever Q3 EBIT margin of 9%, which has never happened for the last 10 years as far as JLR is concerned. So we are on the right track on JLR. The key shift that has happened compared to the JLR of the past is the pivot towards premium luxury. It is a brand-led growth. It's a luxury customer that we are dealing with, and the vehicles are actually delivering to the promise that we are putting to the customer. So that's giving us the confidence that whatever may be the storm out there, we should be able to weather it well.
For more on the outlook for the Indian economy, let's cross over to our studio in Mumbai, where Insight anchor Haslinda Amin is standing by with our next guest.
That's right. Just to put that in perspective, Rebecca, an economy that's grown 8.5% now at 6.5%. And we know that when it comes to the Indian market, it's been smacked. About $8 billion of foreign funds have already made an exit. So how does it look in 2025? What will it take to reverse that picture? Edelweiss AMC CEO and MD Radhika Gupta joins me this morning. Radhika, good to have you with us.
Thank you. Thank you very much.
Has anything changed when it comes to the Indian market? I mean, the premises are the same, right? We have inflation that is sticky, dollar that is high, and growth that is slowing down.
So I think the long-term story hasn't changed. I think the long-term picture is India's the world's fastest growing economy, et cetera, hasn't changed. I think the short-term looks a little more turbulent than it did. So 2025 may be a less easy year for Indian equities than 23 and 24 were. I think it's a combination of two things. One is a little out of India's control, which is a new US president. India hasn't seen tariffs imposed yet. But, it's a little bit out of our hands. And the second is slower earnings growth in Indian equities. That we hope will bottom out in the first half of this year, and perhaps the second half of the year may look like a better year than this.
But you know what they say, hope is not a strategy.
Hope is not a strategy.
We see that uptick in earnings. I mean, we're seeing valuations at 23, 24 times PE. I'm just wondering whether it is a good time to be buying India if you take a longer term perspective.
If you are a long-term investor, it's a better time to be buying India than it has been for a long time. The mid-cap index, I think, peaked at 40 PE. Mid-cap stocks are down 15-odd%. More than the headline indices correction, there's been a lot of sector rotation. So a lot of your stocks in the manufacturing investment theme are down 20-30% for peak. And again, if you believe the long-term India story, I think that's a very salient part of the economy. So it's a better time to be doing individual stock picking than it was in a while.
What would you be picking up? What have you picked up since the budget in particular, which is a boost for consumption?
So actually, we'd been picking up two sectors even before the budget, and I think the budget just accelerates that. We'd been lightening the capital goods exposure in our portfolio. Last year, we picked up quite a bit of technology, and we continue to hold on to technology. We've been picking up consumption. In fact, we're launching a consumption fund as we speak, partly because we think the rural economy in India is picking up. And now the budget will give a meaningful boost to consumption, especially some of the new age and discretionary consumption. So we've been picking up discretionary consumption, some rural consumption themes. We are also going to be picking up lenders on the financial side. I think Indian financials, banks as a sector haven't done so well, and private sector banks in India will start to look attractive, especially as you have a rate cut in India impending.
There seems to be a lot of optimism in my conversations with CEOs of companies here. The optimism is, it can't be missed. But there are risks as well. Are you underestimating perhaps the risk from China, a slowing China, that deflationary export, so to speak, and also the fact that the two economies are tied to each other?
They are, and I think there's risk from China. There's also opportunity created by China if you see an increased amount of trade tariffs. Right now, India hasn't been subject to any of it. So in the last 3-4 years, India has also been looked as a positive alternative. I mean, there's a phrase going around in India called China plus one, and to some extent, it's succeeded in select industries. So there's threat, there's also opportunity.
How do you see the risk from Trump's tariffs? What ripple effects do you see? How might that play out in the market here?
So it's a little early to tell. I think there are two select pockets of risks. One is H-1B, because of course we have, a large software services industry. And so far that risk, while there's been some talk, has been relatively benign. The second is pharma. I think Trump has talked about tariffs on pharma. Again, that doesn't hit our generics industry too much. So I think these are the two pockets of risk that we see. But Trump being Trump, you never know what is ahead of us. So we're keeping a watch out for this.
And the risk of a strong dollar. We know the rupee's been hovering close to record lows, reached a new record low just yesterday. It's hard to be buying Indian stocks when the rupee is so low.
Yeah, I think the combined risk is a stronger dollar and also U.S. interest rates at 4.5%. I mean, in my career, I've never seen a U.S.-India interest rate differential that's as low as 2%. So I think the foreign investor case for India, as attractive as India looks in the long term, when your local debt is closer to 4.5%, I can see the challenge. And we'll just have to wait it out. The good news is that for all the foreign selling, and there's been a lot of foreign selling.
Will that accelerate, do you think, the foreign selling?
I don't know if it'll accelerate. The question is, will there be a re-entry of foreign investors into India? So I think foreigners are looking at India very positively from FDI, but immediate FII flows, hard to see. I think the point is domestic flows haven't slowed down in India, and in the last 3-4 years, I mean, we've now got almost a $3.5 billion systematic book in India of retail money, a large amount of money coming into the mutual fund industry, which I represent. I don't see that slowing down. In fact, October, November, and January actually has been a very, very strong month for domestic flows. So I think domestic flows have held this market up versus 2008 and even COVID.
All right, Radhika, we have to leave it there. We have Radhika Gupta, Edelweiss AMC CEO and MD, here with me in the brand new Mumbai studio. David, back to you.
Yeah, there we go. We're looking forward to this launch of this new consumption fund, of course, from the interview there with Haz over in Mumbai. Okay, very quickly, before we wrap up the show, and we're just over 2 hours away from that tariff deadline kicking in, and there's a lot of hope in this market that we might hear something ahead of that. If that is in fact going to be the case, it's hard to imagine conversations are not taking place currently right now. H-shares index, the Hang Seng China index is up 3.5%. We're coming off highs, as you can see visually. Although in terms of just the price move, right, this is the best day for this specific index. You go all the way back to October 18. We're at the highest level going back to the start of October. And as you can see, also on a technical basis, right, momentum gauge signaling that the three benchmarks here are actually now, for the first time since the initial leg of the rally back in September, now exhibiting maybe signs of overheating, overbought. That's a question mark, of course. Certainly momentum, as you can see, is quite strong currently in this market. And of course, we are counting down to just, over 2 hours away. And do we get an 11th hour deal, I guess is a question.
Even do we get a deal in the few hours following it? We know that
That's
there's
right.
going to be this imminent call, according to Trump, between President Xi and Trump, we assume. That, of course, could bring us closer. So, maybe it's just a case we have a few hours of tariffs.
Yes. So unless you're exporting something in just two and a half hours from now, maybe hold off. We'll see.
Anything feels possible.
That's it from us here on The China Show. Plenty more ahead, though, on Bloomberg TV.